Our today's topic is carbon tax and carbon border adjustment mechanism. A carbon tax is a type of a Pigovian tax that is levied on transactions that have negative externalities on the environment or society as a whole. For example, tobacco tax, sugar tax, and carbon tax, because these taxes are levied on the transactions. Say, tobacco tax is levied on the consumption of tobacco because it may have negative externalities on the environment as well as on the society. Similarly, carbon tax is levied on the transactions which result in emission of greenhouse gases which have negative externalities on the environment as a whole. So to demotivate those type of transition, this Pigovian tax is levied. This is more of a demotivator in the form of financial taxation or penalty. So this is named after British economist Arthur C. Pigou, who is a tax expert on market transaction. So carbon tax is an environmental tax that is levied on carbon content of fossil fuels such as coal, oil and natural gases. The objective, as we just discussed, that is to reduce the greenhouse gas emission by creating a financial disincentive for pollution or encouraging the clean energy alternatives. It is calculated based on the amount of CO2 or other greenhouse gases which are emitted and promotes a market-based climate solution. So what are various types of carbon taxes? So based on the emission it is there, so that is emission tax, like what may be the emission of greenhouse gases. Based on that, the tax needs to be levied or paid. Similarly, energy tax is that which is levied mainly on the fossil fuel consumption, calculated from the carbon or energy usage. Then cap and trade system, in which a cap is there on the emission or permission may be there, the permits traded in carbon market to incentive reduction. And then the border adjustment tax, this carbon border adjustment mechanism, this is more of a border adjustment tax. It applies carbon tax on the imported good based on the emissions during the production to prevent the carbon leakages. Now what is the carbon leakages, we will discuss in the topic when we discuss this CBAM. Now, what is the status of carbon tax in India? So, India currently does not have a nationwide carbon tax, but there have been a proposal to introduce one. In 2015, India introduced a carbon tax of rupees 50 per metric ton of coal, but it remains unimplemented. So, that is more about the carbon tax which we discussed as of now. But the current topic in the recent times, you must have heard about the carbon border adjustment mechanism, especially the UK CBAM, and India has recently entered into free trade agreement with the UK. So what may be the impact on that agreement, and what actually this CBAM is, and what is it has to do with the carbon tax or carbon leakages. So let's dwell into this concept. The CBAM is a policy tool aimed at reducing the carbon emission by ensuring that imported goods are subject to the same carbon costs as products produced within. So the first motto of CBAM is, suppose for example in UK a good is produced at 100 rupee 100, and a carbon tax is levied there in the UK, say at the rate of 30% based on the emission. So you need to a producer there need to pay 30% as a tax rate. So overall cost of production will be 130. Whereas that the same producer, if he goes to some other, say, some other least development countries wherein there is no such carbon tax related concept, that may not be there, so they will produce there and then they will import from that particular country. So to demotivate that particular transaction, suppose now cost of production in that particular country, say it's like 110, so this balance of 20 rupees will be levied in the form of carbon tax. So it will ensure that the domestic the producers, their interest is protected. That is the first thing, because they have to pay the carbon tax, so it has to be competitive, and that the carbon tax alignment with respect to the domestic producers. And second is the real motto of carbon tax is this: it's not only the greenhouse emission in a particular country or a UK, it should be at the global level. So it promotes that global level adjustment at the same time, or global level disincentive. So these are the two major objectives of introducing the cross-border adjustment mechanism. So goods imported into the UK from country with lower or no carbon price will have to pay levy. In case of UK, it is supposed to be implemented from 2027. So by implementing the CBAM, the UK aims to protect its industries, reduce carbon leakage. So what we discussed just now, that is the carbon leakage. that instead of producing in your own country, you are getting the goods imported from other countries, or your producers, they are going to some other countries and producing there and emitting the greenhouse gases there, and again exporting to the UK. So that leakage should not be that. That is adjusted or addressed through the CBAM mechanism. uh, Beside the carbon leakage risk that is there, and it also encourages global partners to adopt the sustainable practices. Carbon leakage risk occurs when domestic industries face stringent emission regulation, leading them to shift to production to countries with weaker climate policies. So UK's CBAM is aimed at bolstering the UK's commitment to industrial decarbonization and achieving net zero greenhouse gas emission by 2050. So that is the overall objective of there with the CBAM mechanism. And it also ensures that there is a clean energy achievement by 2030. This is similar to the objective of the European Union, that has already implemented the CBM. So implementation is like it will be implemented by requiring importers to declare the quantity of goods imported into the UK and their embedded GHG emissions on an annual basis. To offset these emissions, importer will need to surrender a corresponding number of CBM certificates, the price of which will decided on weekly basis. So this will be the mechanism. This mechanism is related to the EU, not UK. So this mechanism is already there with the European Union, because in UK it's going to be implemented from Jan 27. So here, while importing, there will be a custom department before the goods entering into the EU. So here they need to certify that what is the effect of this carbon tax or GHG emission. So that custom department will take care of this aspect. So before reaching the goods into this, they need to pay for it, or they need to provide some certificates regarding the GHG or this carbon related documents or its effect that needs to be there. Though it applies to imports from industries like steel, hydrogen, cement, etc. So these are the sectors which are primarily there in the UK carbon border adjustment mechanism. So notably, unlike the EU's CBAM, UK's mechanism does not cover electricity imports and exempt the glasses and ceramic sector until further implementation issues are addressed. So as of now, it will not be applicable on electricity, which is not in the case of in the EU, but it will be applicable on products like steel, hydrogen, cement. So what will be the impact? The impact is that first and foremost, it will have a positive impact on the environment as a whole, and will have a positive impact on the domestic industries of UK. Other than that, impact is that it will create an increasing complexity of climate regulation worldwide. And then companies must navigate regional or national climate regulation and their cross-border implication to advance low carbon business model and enhance their competitiveness. The competitiveness may be of many types. It may be a cost competitiveness, it may be of product competitiveness related to product niche and customer focus, that may be there. So there are mainly three types of competitiveness. So here, if you see that you don't have any mechanisms related to the carbon taxation or regulation, then you will face these issues. So the developed countries who already have that country, those mechanisms, they will impose those types of taxes on the countries which do not follow the regulation related to the say climate action, or say they do not have any regulation to address those climate action related issues. To be in line with them, they have to have their own regulations to address the climate issues. Now the liability calculation will be like emission per value of the goods, like maybe the steel. So that will be there. Then what is the effective UK carbon price and what will the effective overseas carbon price? So difference will be taken by this UK in the form of carbon border this adjustment mechanism. So if we talk about India UK FTA, and this has been the news recent time. So India UK FTA does not include a provision related to Britain's proposed CBAM, but if such a tax is imposed in the future, India will have the right to take step to mitigate the impact on domestic exports. This has been in the article of yesterday's news itself. The CBAM is not in the pact this free trade agreement and has not notified the tax. Because of that, it is not there in the pact. UK had in December 2023 decided to implement it from 2027. The issue was flagged during the comprehensive economic trade agreement negotiation. One of the official of Indian government has stated that if it is implemented and negates the trade benefit of India under the agreement, India will have the freedom to rebalance it. India can take counterbalancing measure. This much understanding has been made in the form of not verbal. What is the not verbal? And not verbal is a diplomatic communication between two countries. So it may be in it's more of an formal use only, but it's not and verbal at the same time, means more of a formal agreement, but has not been taken into the free trade agreement. So that understanding that has been there between the authorities. So I hope this topic related to carbon tax and this CBAM is clear to all the viewers. Thank you for watching.